Hey everybody, Jordan Dunsmore here from YTS Wealth Management with another edition of Off the Charts. So the last 2 years in the market have been fantastic, 2 straight years of 20+% performance. So what we want to do this week in Off the Charts is we want to look at just how often we see 20+% years 2 times in a row, and then what does that third year often look like? Let's go to the charts to find out. So the market just completed its second year in a row of 20+% performance, which is probably not as rare as you would think, but the more important question is, can it continue for a third year in a row? So it's been 8 times in history, if you look back, that the market has had back-to-back 20+% years. Most recently, we saw it in the late 90s when it actually did 5 years in a row of 20+% performance. But before that, we have the early 80s, the late 70s, and then in the 40s and then the 30s. But as a whole, generally it's a mixed bag. If you average all the third year performance after 2 20+% year gains, they average about 6.7%. But we've seen wild swings. We saw in the 30s, the market down about 35% after 2 20+% years. Then in the 40s, 50s, we saw actually pretty good years following that. 1977, we saw almost a double-digit correction. But still, what most people remember is the dot-com boom in the late 90s. Market went crazy for 5 years in a row, and then we saw 3 years of corrections. So what we're seeing right now is some similarities to the late 90s when it was the dot-com boom. Maybe we'll look back 5-10 years from now and say we're in the AI boom right now. Although we do feel a little more confident about some of the largest stocks out there, their business models, their revenue generation. But as a whole, we would caution a lot of investors that have made 20+% the last 2 years. Maybe it's time to pull back just a little bit from some of those growth stocks because you got 4, 5, 6, 7 years of performance in the last 2 years. And we're thinking there is going to be some headwinds with the economy. So it might be time to move a little more towards some of those safer stocks, whether it be the grocery store items, the consumer staples, healthcare stocks, areas like that. But as a whole, again, if the market can eke out another gain, we'd be really happy with that. But again, those that did participate in the last 2 years, congratulations. And it might be time to protect some of those gains. But thank you again for tuning in to this week's edition of Off the Charts, and we'll see you next week.